Hi, this is Bill Wood from Disciplined Trading Decisions. Welcome to the weekend update.
Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results.
Okay, let's get this show on the road. I have the SPX here. This is a weekly chart. Right here is my bullish count where we have wave 1, wave 2, wave 3 made up of 5 waves. 1, 2, 3, 4, 5. Wave 3, major wave 4, and we are in our 5th wave. It takes 5 waves to make up the 5th wave, and so this would be 1, 2, expecting 3, 4, and 5. So that is the bullish count, and the bearish count looks like this. We have our wave, major wave 1 here, major wave 2, major wave 3 here made up of 5 waves, 1, 2, 3, 4, 5. Major wave 4, and so the 5th wave would be made up of 5 waves. So you have 1, 2, 3, 4, 5. So 5 major waves, 1, 2, 3, 4, 5. If that is correct, then we expect a large correction. Okay, let's look closer at the bullish count. All right, so here's your wave 3, wave 4. Again, this is the bullish count. A large wave 1, wave 2, and we have a wave 1 here again, and wave 2 for an extended 3rd wave that comes up somewhere up here. I'm expecting here for that would be an ABC down to this 2, but it really shouldn't break the low of this 2. So if you look at this, we're just balancing in this area. Let's take a closer look. This is very difficult to count. If that was wave 1, is this the end of wave 2, or is this just an A wave? And somehow, some way, this is the B wave, and we're waiting for the C wave down here. But to me, this looks kind of bearish. So let's look at the bearish count. Okay, on the bearish count, here's your wave 4, and wave 5 is made up of 5 waves, 1, 2, 3, 4, 5, to make up the blue 5, which makes up the major wave 5. And if that is true, looking for a correction. So this wave down here, is this just wave 1 and then wave 2, and we're looking for like this 1, 2, 3, 4, 5, something like that, maybe for just wave A and B and then C further down here. And for this 3rd wave here would be made up of 5 waves, 1, 2, 3, 4, 5. Okay, this is a shot of the ES, and let's just say for giggles that the market does come down. If it does come down, these would be some of my targets. If you draw a trend line from back here to here, that's this bottom trend line where it matches up with this Andrews median line. This would be the 2nd line, and from here to here would be the 3rd line. Those are the 3 areas I'd be watching. And if you notice where this top trend line and this Andrews median line crosses, it's right at the top of this bar, this reversal bar here. So that would be very interesting if it got down to here, if there could be a bounce. Not that it wouldn't go lower, but perhaps a bounce. So you can see that we had on the weekly bar, we had a strong down bar taking up 1, 2, 3, 4, 5 weeks worth of action. 6, 7, almost 8 weeks in just 2 bars. And now we have a 3-bar balance. These 3 bars are in balance. On the daily chart, you see that we have this consolidation area and we broke out of that. To me, that's kind of bearish. But so far, we have higher lows. So until we start breaking these lows, what can you say? Actually, higher lows here, 1, 2, 3, 4. Now, there were a couple of areas that I talked about last week. I talked about, let's see, this was Friday here. So the market was, I believe, here on Friday, and I talked about it coming up and testing this breakout point. On this bar here, let me just scoot in some. On this bar here, this was a nice reversal bar that happened around 10:30, 11 o'clock on Tuesday. That was a decent trade there. Saw that the market came up here and touched this trend line, came up here and reversed at this trend line again. That was around 9-10 o'clock in the morning. If you remember on Friday, I also talked about the market coming up and testing this median line here. It came up and tested it twice, and that coincided with this breakdown here. The best trade on the whole chart happened this morning. If you follow our reasoning for these breakdown points, we had a breakout from right here. And if you drew your box there, in the first thing in the morning, market came up, just tagged it, turned around, and that was it for the rest of the day. So I call these buy and sell zones. So the market was going sideways. It's sold out of there, comes back and tests it. The ES, I believe, is famous for second chances. Okay, again, the 4-hour chart. If you look at this Andrews median line, I find that it's interesting that it stopped right there. I don't plan on this low holding. I don't plan on this low holding, to be honest. Not even sure about this one. Let me just show you on market profile. So as we taught the other week, we had the market trying to go down, right? Leaving these tails down here. What happened when it left this tail? Came up and balanced. Left this tail, came up and balanced. And then the market said, forget about it. And I believe that this was short covering. So we balanced up here, tried to go down again. Longs weren't having it. Shorts had to cover again. Market tries to go down again. Shorts have to cover again. Then we balance up here. Look, 1, 2, 3, 4 days, we could not break this high right here. Could not break it. So now I think we were trying to get long here, and the longs had to liquidate. So we're in a balance area here. The market's comfortable right here. It likes these prices right here. So the market opened near the low of the prior day, Thursday, tested higher, could not hold above yesterday's POC, balanced in here a little while, and then broke down. Now, did leave a tail here, so it'll be interesting on Monday to see if we fill in this tail or go below it. If we cannot fill in this tail, the market will probably try to go up again. But overall, when I look at these bottoms, 1, 2, 3, all in a very close area, I would not be surprised at all if next week we pierce this low. Okay, last but not least, on Monday, we're going to see where we open up. I'm going to put a couple lines here. So here is this rejection area. If we start filling this in, getting acceptance below this line, I would not be surprised if we break this low back here. We have a double distribution day. So the next area I'd be concerned about is this area here. Can it get acceptance above here? And can it fill in these single prints here? If it can fill in these single prints, that's much more bullish. If we take a look at a regular chart again, you can see that the market tries to go down and it gets caught and goes back up. Can't go any further, kind of gets caught. Longs get caught up here, it goes down. Can't make it go any lower. The shorts get caught, it goes up. It just seems like people are getting caught on the wrong side of the market, and we're just whipsawing, trapping people in their inventory and punishing them. So as long as it remains in this area, I don't know how interested I really am in trading this. Right now, this bearish count makes the most sense to me, that we're going to go down maybe for a wave A, B, C down, maybe even break this low back here. Right now, that makes the most sense to me. What the market would have to do is break above these highs here for me to jump back on the bullish bandwagon. Hey, that's all I have for today, and I want to encourage you to click the link below to go to my website and take the trader's test. The new and improved trader's test. Test your trading knowledge and your trading strategy. And one more thing before I go, I have a question for you. How do you keep a trader in suspense?